What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, and the first thing that I want to talk about is the Bitcoin Fear and Greed Index, because within the last few days, as we were seeing Bitcoin retrace down towards 112, 110, $109,000, the Fear and Greed Index for Bitcoin got to as low as 28, which is a state of fear, only 3 points away from the threshold of extreme fear, that being 25. And something that I briefly mentioned in a post for the channel was just how intensely bullish this is. The fact that really we're seeing something that hasn't been seen during the current bull run. The only comparable past instances of fear and extreme fear would be going back to the first quarter or so of 2025 here, as Bitcoin was pushing down to around 76, 75,000 at lowest by around April earlier this year. Going back here to 2024, as we saw from around July going into August, September, October of 2024, again we're hitting here values of 26, 29, 2020 or 22. So we're seeing extreme fear here, fear and extreme fear. Same thing here, 21, 24 fear, extreme fear. And for these two instances, the earliest would be back at the very end of the prior bear market, seeing fear and extreme fear scores of 29, 28, 21. So if we look here at the price specifically, we can see that this period of price here, here, and here, spanning from 2022 to 2023 to 2025 here. And now again, 2025 would be the areas in which states of fear and extreme fear were met. But what's very, very interesting is that with these three instances beginning back at 2022, then going to 2024 and 2025, all of these were printed at, for example, this first one was not just a local low, but it was a macro absolute low in terms of that localized bear run. But for the period here in 2024, this was a local low in the overall upwards poised structure of the current bull run. And the same thing can be said for this here. But Bitcoin is sitting in all-time high price discovery, not in local lows, but in a sideways, again, it's a sideways, we're in a horizontal, really it's upward poised. As you can see, we're seeing higher highs here for the price, higher highs. Currently we're seeing higher lows in price discovery. So it's very much so different from these past three instances that I've pointed out. And the fact that we are seeing, like I said, levels of 28 of fear, and all the while Bitcoin is sitting above $100,000, specifically at around a local low of around $109,000, $108,000, with room to still drop down comfortably so to $100,000 and then see extreme fear actually come into effect again while we're still in the price discovery of all-time highs. We're not at what could be considered a local low in comparison to these three instances here that I pointed out, going all the way back to the end of 2022, the beginning of the current bull run. And if we do see the price come down a little bit lower, down to around 100,000, we can see here that this horizontal line spanning the chart here denotes $100,000, and this would, as you can see here in this upward structure, this uptrend that Bitcoin's been in, which for now appears to be tapering off and into a state of consolidation, could come back down and retest this horizontal support here, mainly and notably here during this period, and completely, in all likelihood, find a bounce here, as I mentioned, we're likely going to, at the very least, see a drop back down to, I think the most recent poll or data point is 33, so we could totally see a drop back down into the high 20s, potentially entering into the extreme fear zone of 25 and below. Again, with the main emphasis being here, while Bitcoin is still above $100,000. That is really no other simple way to put it other than that is objectively extremely bullish, because when we see the fear and greed index enter into states of fear and extreme fear, this is when players such within the circle of big money, I mean, that's obviously going to factor in big tech, the elites, the people at the top of society, institutions, think about BlackRock, Vanguard, all the institutions that have US Bitcoin spot ETFs accumulating to the degree of billions and billions of worth of dollars for their investors and those assets that they manage. Like for example, with BlackRock, a little over $10 trillion assets managed under management globally. So this is a perfect opportunity for the smart money or the big money to cause as the data is showing, states of fear and extreme fear within the retail or dumb money, the small fish within the sea, within the ocean of the markets. And this is exactly what these big players, these people within big money, want to see happen to the small money, the retail money, the dumb money, so as to lead them to believe that the entire house representing the market is on fire. It's not just on the brink of collapse, it is collapsing and it's about to start exponentially collapsing. This is what the big money wants to instill within the awareness and the mindful understanding of the market within the dumb money that they attempt to control psychologically with the ebb and flows of the market. All the while, obviously, the market, specifically an asset Bitcoin represented by the house, is not on fire, and it's not just a short period away from completely collapsing in on itself. Rather, the situation here is that there is an easily controllable and small grease fire that has erupted in the kitchen while you're making some food, and it's a simple fix. And this is exactly what the big money sees it as. There's nothing wrong here. Bitcoin's still above $100,000. The ETFs for Bitcoin are the most successful in US history, outpacing even gold in earlier periods of time in comparison of the lifespans of the Bitcoin ETFs to gold ETFs. So again, really the main point as I lead here into the further charts here on the 4-hour, that things may, especially within the context of retail or dumb money, the small fish of the sea and the ocean of markets, are obviously so panicking right now. All the while, again, we see the price here sitting right at $109,000. We're still seeing these higher highs. As we can see here, we're seeing these higher lows. We're on the brink of setting a shorter term lower low here, especially if we see the price come lower. This uptrend zone that I've been pointing at in the last few videos in the 4 hours, in the earliest moments of breaking, this might be an anomalous deviation fake out where we then see Bitcoin recover and continue to go higher here. But we could also see, zooming out a bit further, this purple uptrend here going all the way back to first week of August when Bitcoin is hitting approximately $50,000. There is this zone of support here that could come into effect somewhere around 106.5 thousand all the way down to around approximately 101. Just bring it down to 100,000. So the range of around 106, 107,000 down to around 100,000 could totally come into play, where in the short term we'll set some lower lows here, but overall, ultimately this would also line up with finding horizontal support right here at around $100,000. Again, mentioning $100,000 on that Bitcoin Fear and Greed Index chart, we could totally see something like this happen, and then find a bounce here, continue to actually set further and further price discovery, moving towards 150,000, 180,000, perhaps $200,000 and higher, going into the end of this year, perhaps early Q1 of 2026. But really, $100,000 is a very reasonable spot to be looking out for. Even lower than that, I think, is possible, as I'll get to later on higher time frame charts. But here with the 12-hour, we can still see that the uptrend here for the 12-hour, which this is synonymous to the black channel, that uptrend that I pointed out on the 4-hour, but on the 12-hour here, you can see it's a bit more intact. I did adjust it a tad bit. I had the support, the lower bound, at candle opens or closes, depending upon which candle I put it next to, which shows that the price here is actually sitting literally right on top of the support. But if I bring it down to the wick low, you see here that we're still within the overall support zone. So we could here on the higher time frame here, not really a high time frame, but higher than the 4-hour here now on the 12-hour, it's showing more credibility towards the idea that we're still potentially in the green for finding another support in this uptrend. going to be very important to break this descending resistance here, somewhere around 111, 112,000, roughly synonymous with where the 200 EMA currently sits. And really kind of the 13 EMA, 200 EMA, and the 50 EMA create a range of around 111, 113,000. So that's going to be very important to get back above. It's also corresponds here to this yellow resistance slash support zone here of a horizontal nature. Looking here at the 12-hour RSI, recently the RSI came within, let's see here, 10 points of reaching the zone here in purple, which is around 24 to 17. If I zoom out to the very beginning of the bull run on the 12-hour chart here, we can see, denoted by each of these vertical purple lines here. Again, we see this highly oversold, most oversold RSI range of the current bull run. Every single time this has been hit, we see again these vertical purple lines, and it is deducible that each time this happens, Bitcoin is setting a local low within the overall macro structure of the current bull run. And if this happens again soon, especially if price is still above $100,000, or even if we see that RSI zone, most oversold zone met, and we see the price come down to the 800 EMA here, somewhere around $95,000, maybe even some wicks down to around 90,000, as I've mentioned in a number of videos ago, that it's totally possible to see retracement down to as low as $90,000 approximately, and continue to find support towards the upside because it lines up here with the 800 EMA. You can see the significant support here back in April 2025, here from around August to September 2024, and it was rough support here right in the earliest moments of the beginning stages of the bull run here as well. The sideways range of around $26,000, $25,000, which then led up to $75,000 here back in March or so of 2024. So that's totally possible. And if so, then seeing this RSI come down in this most oversold territory, which in my opinion would just make what I've already been going over even more intensely bullish than it already is. That's factoring in the fear and greed index with the context of the analysis gone over on this 12-hour chart. Now, if we move in here to the daily, the 200 EMA is being approximately retested. We could see the price come down a bit lower, basically down to $106.2 thousand, and then find a bounce here on the 200 EMA, two further highs, potentially leading up to the zone that I have been projecting here for quite a while at this point, anywhere from around 175, 180,000 upwards towards 220, 230, 240, $250,000 at highest, according to various analyses that I've deduced that zone from. Now, if you look here at the RSI, you can see that it's sitting right above, basically right along the 272, and we are seeing a number of hidden bullish divergences here in comparison back to, we can see here the ascending support here, the ascending support of the RSI. There's some hidden, a 2x hidden bullish divergence there. We're encroaching upon, especially if the price goes lower, a hidden bullish divergence with here on the RSI and the price ascending, connecting the price around $75,000 to a local low of around $104,000, $105,000 or so, with, in that case, likely, it could end up being an exaggerated or less influential hidden bullish divergence, or it could be a full-on hidden bullish divergence that has more credibility within the analysis of it playing out to its conclusion. We also see here with the stock RSI, it's almost all the way oversold down to the very bottom of the range. Yet again, the price is still above 100,000, hasn't even retested the 200 EMA yet. It's we compare the stock RSI here back to around 50,000, it's more oversold. That's not too big of a deal, but I think something important to note as well, because we saw that same thing happen here and here, where the price ultimately found support to continue to go higher. Obviously, in the shorter term, clearly the main structure of the price here is that we saw this initial move from 50,000 back into further price discovery, and then since then we've seen kind of a tapering off of the price, and really the big question is whether or not we're going to lose the 200 EMA, lose the horizontal support here, and continue to go lower down to the 800 EMA. Potentially, that we'll find support here towards the upside, or we'll find rejection from the zone down lower, which would take the price lower than the horizontal support here that is synonymous with that 800 EMA, putting into effect the ascending M pattern here, this double top, which leads me to the 2-day chart here, where we can see this on a slightly higher time frame. Again, this ascending double top M. If we lose this horizontal support here on the daily, 2 daily, and higher, more notably the weekly, then that would initiate a correction that would, historically speaking, in terms of percentages of around 45% and higher, being indicative of a transition into a macro bear sentiment, i.e. a bear market. So if we see this happen, if we see this double top pattern play out, then that, in my view, will lean towards a bear market ensuing. It would be very similar to what we saw here, this ascending double top back in the prior bull run, where we can see once this horizontal, this neckline of the M pattern, the double top was broken here, you can see that it was just a torrential downpour to the downside in the vast majority, a little over 50% of that, this entire bear market here of the most recent. So if we do see that again, we would see retracement down to somewhere around here on the 2-day, somewhere around 55,000, give or take a few $1,000s. Rough alignment with here the 800 EMA on the 2-day chart. Now, I suppose it's totally possible that we do see something like this, retracement this low, that we initiate that double top pattern and its corrective projection, and there still does exist the potential to find support here and actually continue to go higher into further price discovery, higher than $125,000 to $130,000, because there are a few exceptions. For example, going back, we had the March, leading into the March crash here, was over 50% drawdown, 45 to 50% drawdown, yet afterwards we saw, obviously, this monumental bull run up to $64,000 during 2021. There's also an exception going back further to the retracement here back in the earlier days of Bitcoin. This was over 45 to 50%, yet we saw this move here. So there are a number of exceptions, like the two that I pointed out. But as we are further on in the aging and maturation process of Bitcoin, I feel like these exceptions will become less favorable and less likely due to the, and really weakness isn't particularly the best term to describe it, because I don't want to indicate that Bitcoin is getting weaker over time. I think it's actually the opposite of that. I think it's getting stronger, but the price conveys a superficial demonstration of quote-unquote weakness by the fact that clearly this current bull run, as I've described plenty of times, has been this elegant, gradual, almost hard to bear bull run in comparison to, for example, the bull run here, where it's just a borderline one and done pump towards the upside, especially even in comparison to here 2015 going into 16, 17. We've seen this absolutely face melting, these mind-numbingly parabolic bull runs, but this time around, 2022 to now 2025, potentially going into 2026, we've seen again a stair-stepping, a measured bull run that is no longer displaying the youthful vitality and buck-wild nature of the earliest days of the price progression of Bitcoin. So again, like I said, those exceptions, I think, which obviously I could be wrong, will become less likely and less favorable, and I think rather due to the maturation we will see the less of these kind of exceptions, so to say, and we'll actually continue to see the the elegant structure, despite this being a bull run that's been kind of hard to bear because it's just so gradual and lollygagged and just kind of agonizingly long, in the sense that it's just kind of leaving you at all times on the edge of your seats, because you see these quick upheavals of price here, then multi-month consolidation, quick upheaval, multi-month consolidation, upheaval, just you see again this stair-stepping of price. So it's kind of hard to get through, and you never really know what's coming because, well, you're seeing these multi-month retracements, and especially with the quote-unquote kind of like the super surface level weakness that people are proclaiming for the current bull run of Bitcoin, you don't really know where to lie. And again, it kind of factors into the whole idea of the Bitcoin Fear and Greed Index that I was pointing out earlier, with the dichotomy between big money and small money. And this is really what the big money wants, more structured, more measured, more elegant bull runs associated with institutional money and other pools of big money, so as to really throw the people within the set of small money market participants on a full psychological loop, just in panic and fear over trivial, approximately 5% corrections, because that's what's happened recently from the move here, around 116,000 down to where it is currently, is around a 5 to 6% correction. Yet, as I've already demonstrated and shown, the fear and greed index got to as low as 28, almost getting into states of extreme fear. So this is really, again, exactly what big money wants. And your goal as a person who is more likely than not watching this video, a part of that small money group, not that, to indicate that you need to become part of that big money group, but you need to be someone who exists outside of the box or the set of small money, as somebody who is able to escape the financial and monetary slavery that the modern world exists in with fiat currencies, and the fact that they have no inherent value, especially the dying and dwindling American dollar. But here's a look at the first weekly chart showing the trend-based Fibonacci extension here, with the importance here of the 0.5. You can see that it was initially resistance here, but afterwards there was support found along the 13 EMA. Price moved up to the 618, and so far has been able to find support along the 0.5. So this currently is holding up as support at around $107.7 thousand. If this is lost, then down to the 50 EMA, somewhere around $92.5 thousand, down to around $103.6 thousand could be the next area which finds confluence and further support with the previous analysis gone over on the lower time frame charts. And looking here at the weekly, you can see just how important the 50 EMA band here has been in overall macro bull run support since the end of 2022, going into 2023, 2024, now in 2025. A notable ascending resistance here is going to be from these two local peaks, 75,000 approximately to around $108,000, and also here a lower resistance of the local low here back around 79,000, the local low of more recent here back in around later May, around 112.5 thousand, and even more recently around mid-July here around 123,000. So these are going to be very important to get above let's say we see the price pick up here while holding the 0.5, and we see a move back up to the lowermost resistance somewhere around, mid to late October. That's around $130,000 to $140,000. Continues to push higher towards the upper resistance, the upper bound, sometime around late November going into December. We could see the price hitting around $180,000, potentially deviating higher and having a kind of an anomalous, kind of like a fake out of what has been resistance here so far, to kind of put a capstone on the current bull run. At least in my view, I think if we do see if the bear run has not indeed begun, then I believe, assuming it so, that the price picks back up over the next number of months going into Q4, potentially Q1 of 2026, that we'll see a move, a final thrust towards the upside that could break this upper bound resistance so as to put a capstone on the current bull run, and then we enter the multi-year bear run that would likely, I think, take us anywhere down to somewhere around here, somewhere around $60,000 to $70,000 at the lowest, around $55,000 to $56,000 for the next bear market low. That's where I believe that it will end up falling. I mean, that's if we actually see another final thrust here upwards towards at least around 180,000, pushing $200,000 and higher. With the 1.618 here, this extension lining up with 220,000, the 1.786 lining up with 245,000. The 236 or the 1.236 to 1.272 lines up with around 172 and 176,000, and the 1.382 at around 189, 190,000. So if we also look here down at the RSI, we'll see that there's kind of this rough, as I pointed out in past videos, there's this lowermost horizontal support. So if we see again RSI come down to this, it'll be roughly synonymous to the overall support that I pointed out on the 12-hour chart. But if we see the RSI come down to this and Bitcoin manages to hold $100,000, entering states of extreme fear, like I said, it's just going to be insanely bullish, because we'll see the retesting of the 50 EMA band. We'll see the RSI hitting its most oversold bullish territory the entire bull run. We're seeing fear and greed enter into, likely speaking, extreme states of fear. Again, thinking about the big money, small money dichotomy, that's exactly really the dynamics, psychologically speaking and technically speaking, of the market itself. Now looking here at this weekly chart, we'll see the here to take this off to have a more clear picture. We see this Bitcoin rainbow wave indicator where historically these periods of, or these zones appear rather, have always lined up with the all-time highs. We can see here back in 2021 to 2022, 2017 here, 2013, and then also going back to 2011, the end of the first cycle of Bitcoin. So this has always been met. We're running out of time, so if it is going to be met, that's anywhere from around, I would say at earliest, probably like mid-November. So that's anywhere from around $200,000 towards the end. So a range around $200,000 to $215,000. We might even see some wicks, potentially going a bit higher out of this because that could, they happen, for example, here. And these were in the early stages of Bitcoin. So like I said, we're kind of seeing that youthful vigor of Bitcoin and its price progression and its bullish nature die down a bit. So that's less likely this time around, but it's definitely still possible, which again further validates the Fibonacci, the historical Fibonacci extension of the proximity of the 2.272 that is always predicted the all-time highs for Bitcoin post cycle 1. Now to bring back up that parallel channel and take off the rainbow wave indicator here, we can see that the 786 here has been a paramount support with these two instances here, a rough third instance here, fourth instance here, and a rough fourth instance here. Now that we can see the price sitting on it, so this is generally anything below the 786, as you can see here, right at the 786 and below it. This is the all-time support of the current, the localized bull run that Bitcoin is currently in. And if we see a return back towards the upper region, upper bound zone of the ascending channel here, then we could expect an all-time high from anywhere around 170K, pushing 190K, pushing upwards towards 200, 220, 230,000, like I said, sometime by at latest January, just probably early Q1 of 2026, which again, finding confluence with that Bitcoin rainbow wave indicator, finding confluence with this trend-based Fibonacci extension here of a more localized micro example. Skip ahead a bit to go to the monthly chart here to bring up that historical Fibonacci extension that I was pointing out here that's always predicted. See the all-time here, proximity to 2.272, same thing here, post cycle 1, the end of phase 1 of cycle 2 in 2013. We have yet to see this happen, and if so, we'll see an all-time high in proximity to around $207,000, which has upwards deviations as high as around 245,000 and lower deviations as low as around 173,000. And this is a monthly chart with these extensions, so this is holds quite a significant degree of weight regarding technical analysis. But if we look at the 2-weekly chart again, another all-time high, historically all-time high indicator going all the way back to the early stages of Bitcoin back in March of 2011 with the pi cycle high indicator overlaid atop. So as well, this RVI trend down here again, we have yet to see this flash. We still have yet to see any of the outside of the all-time high or alt season index of the 30 all-time high indicators for Bitcoin. We have yet to see any of them fire except for, like I said, that alt season index, which really isn't an all-time high indicator for Bitcoin, but it does signal, if anything, kind of the overheating periods of whether or not it's the very end of a bull run or the the local peaks in a bull run. But outside of that one, none of the fundamental Bitcoin specific all-time high indicators, whether on-chain or off-chain, have fired. Now if there is, I haven't looked at it recently, but if there is another all-time high indicator that is flashed, I'll pop up an image here to correct myself if there has been another one flashed. But as far as I'm aware, currently the only one that is flashed is that alt season index indicator. So we see here again, pi cycle high indicator. We'll see it here on this chart as well, from that RVI trend on the previous chart. Now here to the accumulation distribution of the open interest money flow index. This also goes back to March, April 2011 in terms of predicting the all-time highs. And again, this is also not flashed. Still have yet to see that flash. A new addition here is going to be the monthly Bollinger Bands. The Bollinger Bands have become historically compressed of recent time. In the past, the comparative periods of time would be here, back around December 2023, here back around October of 2020, and here back around May of 2016. You can see that two of these three past instances here were in Q4 of any given year, so we're also entering in Q4 2025. So that could again further allude to we're going to see bullish movement here towards the upside in further price discovery. And then also if we localize the current bull run here, the past instance of Bollinger Bands entering historically compressed territory was also back in Q4 2023. So we're seeing in a non-local and a localized environment here with the Bollinger Bands and the Bollinger Band width, significant indication that the coming or the resolution of the built-up compression is going to resolve towards the upside rather than to the downside. On top of that, as you can see here, each of these, you see these major bull runs here going back to the earliest days, 2010, 2011 of Bitcoin. You can see each of these moves here were in corresponsive to these major dips here, these divergences here in the Bollinger Bands. You can see here, basically as the Bollinger Bands is going downwards here, we see that compression diverging and it's releasing in a bull run. Then we see it build back up and converge and compression towards that kind of the inflection point of the bull run here, for example, back in May of 2016. Then we begin to see the tapering off of the compression as it's releasing, and then again it diverges down here. Then we see rinsing and repeating of the cycle here. Convergent compression, divergent decompression, here convergent compression, and we've just been going sideways this entire bull run. We have yet to see that major, that parabolic divergent decompression of the compression that has been built up. Again, like I said, historically related to each of these prior instances, which have all been bullish in past history. So again, there's really no good reason to be saying that the bull run is definitively over. There are a number of things that allude to the bull run being over, but there's also plenty of bullish structures still intact, as I have been emphasizing recently. Plenty of bullish structures intact that are acting as significant combatants to the whole narrative that comes and goes within the collective conscience of those people participating within Bitcoin and the overall crypto markets, that the bull run's over and the bear run is beginning. But there's really, again, like I said, there's no good reason to be pushing that. Lastly here, culminating with the 12-month chart, the yearly chart. Again, we still see the trend here that I've gone over plenty of times. We're in the third bullish year. Historically, the third bullish year does end off with price discovery with setting all-time highs. Now, that could mean that the current all-time high of the current monthly candle, which is $124,277,000, that could very well be the all-time high. We're in this third year, and we could very well be at the beginning of the bear run. But there's also, like I've been going over and just said, plenty of reason to deny that the bear run has began at around $124,000. We've yet to see the ascending uptrend zone here of the monthly chart be met as well, which provides a range that finds confluence with various other factors I've already gone over, such as the historical Fibonacci extension, the trend-based Fibonacci extension of the bear runs of the phases and cycle structure that I adhere to in my analysis. Again, we see here that at lowest around $170,000 is to be the all-time high, and at highest somewhere upwards towards around $260,000 for the upper bound. And then there's also the possibility that we do see an extension into 2026 as well, which could potentially push it upwards towards $300,000 at highest. But I more conservatively stick to the notion of don't really lean towards anything too significantly higher than approximately $250,000. But that was all that I wanted to go over and talk about and update in this video. So as always, none of this is meant to be financial advice, but all of that said and everything gone over, I hope you all enjoyed, and I hope you all have a wonderful day.